In the ever-turbulent world of financial markets, the price of gold has recently seen a significant decline, plummeting to near $2,400. This fall is a stark contrast to its previous high of over $2,480, driven by a resurgence in the strength of the U.S. dollar amidst political uncertainties in the United States. As speculation mounts around potential changes in leadership, with President Joe Biden's re-election bid in question due to health issues and the Republican Party's increased chances of victory, the market is reacting swiftly. Adding to the volatility, the Federal Reserve's anticipated interest rate cuts also play a crucial role in shaping investor sentiment. What does this all mean for the future of gold prices and the broader financial markets? As we navigate these uncertain times, one must wonder, how will these political and economic shifts impact global investments and economic stability in the coming months? Gold price plunges to near $2,400 as U.S. dollar bounces back. The price of gold has seen a significant downturn, dropping to nearly $2,400 in recent trading sessions. This decline marks a continuation of a three-day losing streak, a sharp contrast to the record highs of above $2,480 reached earlier in the week. The precious metals retreat is largely attributed to profit-taking and a notable recovery in the U.S. dollar, which has gained strength due to increasing political uncertainties in the United States. One of the key factors influencing the market is the speculation surrounding the U.S. presidential elections. The potential withdrawal of President Joe Biden from the re-election race due to medical concerns has intensified the prospects of a Republican victory, potentially ushering Donald Trump back into office. Trump's known preference for protectionist trade policies further boosts the U.S. dollar's appeal, making gold, typically seen as a hedge against economic instability, a less attractive investment. The U.S. dollar index, DXY, which measures the dollar's value against a basket of major currencies, has rebounded to near 104.30. This resurgence in the dollar's value makes gold, priced in dollars, more expensive for investors holding other currencies. Additionally, the yield on 10-year U.S. Treasury bonds has risen to 4.21%, increasing the opportunity cost of holding non-yielding assets like gold. Daily digest market movers. Gold price weakens as U.S. dollar advances. Gold's decline to around $2,400 is also influenced by the robust recovery of the U.S. dollar. Despite this, the near-term outlook for gold remains relatively strong, with investors anticipating that the Federal Reserve will begin reducing interest rates in September. This expectation is bolstered by the belief that inflation is returning to the central bank's target of 2%. However, Fed officials seek further confirmation through softer inflation data before committing to rate cuts. The June Consumer Price Index, CPI readings have reinforced market speculation about potential Fed rate cuts. The annual headline and core CPI, excluding volatile food and energy prices, decelerated faster than expected, signaling a resumption of the disinflation process after a stall in the first half of the year. Additionally, monthly headline inflation deflated for the first time in over 4 years. Cooling labor market conditions in the U.S. further support the case for Fed rate cuts. The unemployment rate rose to 4.1% in June, the highest level since November 2021. Moreover, initial jobless claims for the week ending July 12 exceeded expectations, coming in at 243,000 compared to the estimated 230,000 and the previous release of 223,000. U.S. dollar price today. The U.S. dollar has shown considerable strength against various major currencies. The table below highlights the percentage change of the U.S. dollar, USD against listed major currencies today. Notably, the U.S. dollar has been strongest against the New Zealand dollar. The heat map illustrates the percentage changes of major currencies against each other, with the base currency listed on the left and the quote currency along the top row. For instance, selecting USD base and JPY quote shows the percentage change between these two currencies. Technical analysis, gold price corrects further to near $2,400. In the European session, gold prices further declined to around $2,410. The metal's weakness is evident as it fails to maintain levels above the critical $2,450 mark. However, the near-term outlook for gold remains positive, supported by the upward slope of short to long-term exponential moving averages, EMAs. A significant support level for gold bulls is the advancing trend line plotted from the February 14 low at $1,984.30. The 14-day Relative Strength Index, RSI, has dropped to 58.0, indicating a pause in upward momentum, but the overall upward bias remains intact. As the world watches these economic and political developments unfold, one must ask, how will these dynamics shape the global economy and investment landscape in the near future? Share your thoughts on the potential impacts of these changes on the financial markets.